We've all made stupid financial decisions in our life. Whether you gave money to the deposed Prince of Nigeria like me, or bought something you couldn't afford, they all had one thing in common. That's emotion. My name's Eric. This is Above My Pay Grade. Let's get into it. All right, guys, I have a nice backdrop of the Rocky Mountains today. Cannot beat that. So not to brag, but I have a net worth of over $10,000. And that's your first lesson. You never listen to somebody's financial advice because of how much money they have. Because I could have gotten it in many different ways. Maybe nefarious, maybe something you wouldn't agree with. There's a lot of people giving money to others, doing business in things that you wouldn't, let's say I robbed a bank. All of a sudden I'm a billionaire. Should you listen to my financial advice? I don't think so. So first rule of thumb is where you get your advice from. And you need to use this little thing here, this cabeza. You need to use that. God gave you a brain, and there's always people trying to get you to part with your money. If you watch something like CNBC, there's a guy on there named Jim Cramer, very popular fella. He's always yelling at the camera, like me. And he was telling people to buy Bear Stearns, the company that went bankrupt in 08. He was telling people to buy that in 08. So there's a lot of bad advice out there. The question for you is, do you have the number one attribute of an investor? And that is, in my opinion, know thyself. Know who you are, know what your goals are, and have patience. Know who you are, know what your goals are, and have patience. So why should you know who you are? Are you prone to making emotional decisions? I've made them before. I didn't actually give money to the deposed Prince of Nigeria, but I have made emotional decisions with money. And if you think about your own life and how you've made decisions or bad financial decisions in your own life, they normally are around emotion. You are pressured into doing something that you didn't want to do. And so when it comes to investing, that happens a lot because people have FOMO. They hear about something going up in price and they're like, well, I better jump on this bandwagon. Or they see something going down in price and they think, well, I don't want to lose more money, so they sell. All these are tricks that hedge funds use to essentially take money from people. Because people with a lot of money like hedge funds can manipulate the market to some degree because there's so much money, they have so much money that they can raise and lower the price of a stock, right? So it's important that you have a plan. And what is that plan? I would say, what are your goals, number one? Why are you saving and why are you investing? Because you're delaying gratification. When you take money from today and you save it for later, you're doing it for a reason. And your reason is different than mine. But I think that reason is super important because it's going to that's going to be your North Star when it comes to investing as to why you're sacrificing. Sacrifice isn't worth it if you're just saving to have more money. More money, more problems. I think a rapper said that. Now, if you have a plan and you have a goal as to why you're doing this, now we get into the nitty-gritty of how to invest, what to put your money in. Now, this is where I wouldn't necessarily listen to a guy on the internet, listen to an expert, or think to yourself, a wealth manager has my best interest in mind. They might. Sometimes they don't. But what is common in American society today is, hey, I don't understand this whole money thing. I'll just give my money to somebody else and they'll manage it for me. Meanwhile, they're taking a bunch of fees, etc. you need to use this thing. So you need to take in information and make educated decisions accordingly. And if you are patient, I think that is your edge in the markets, because there's billions of people in markets all around the world making decisions that are best for themselves, right? Including you. But if you're not a patient person, patience as in you follow your goal, you buy something, whether it's a stock, Bitcoin, what have you, and you stick to that plan, whether it goes down or up in price. I can tell you this, most people wouldn't be able to tell you what a stock or Bitcoin or crypto or the housing market's going to do in the next year. I mean, they might have an educated guess, but they can't guarantee you. A lot of good investments involve time. So you're not trying to time something. You're not trying to say, hey, price go up, I sell. Price go down, I sell. You buy something because you think it's a good financial investment over a long period of time. Because that short period of time, there's people in the market, right? People are illogical. So they can make illogical decisions which cause the price to go down, etc. So be patient, have a plan, stick to the plan. That's my advice. Now, one last thing I want to talk about is patience when it comes to buying something. So delayed gratification. So if let's say you're in the market for a house, right? And there's a lot of people that had FOMO in 2021. And they said, well, we got inflation, housing prices are going up. If I don't buy now, I'll never be able to afford. That actually could be true. I highly doubt it. And here's why I highly doubt it. If your average income is X and houses are going so high in price that average income, 2/3 of that is going towards a house, those houses have to come down in price. They have to, because who's going to buy them? If you can't afford the payment, which is what most people think about, no one's going to buy them. So demand will go down. When? I don't know, but it will. Additionally, if you look at the price of houses, a lot of people have recency bias, including me. This is one of those emotions you have to kind of control. But you just look at your experience. And speaking of experience, when it comes to advice, this is another tangent, but when it comes to advice, I'm not saying your parents have bad advice, but I'll tell you this, they lived in a different financial world than you live in today. Different factors, different motivations, different asset classes. There's all kinds of different things that are going on in today's world that weren't going on in the 70s, 80s, 50s. So I'm not saying your parents have bad advice, but oftentimes it is based on their experience, which is fine, but you need to take that into account. Where was it? So housing, it's gone up in price so much. It's higher than it was in 2006 before that massively huge housing crash that we had. Remember that? It's higher in price adjusted for inflation on average than it was in 2006. Can it go higher? Potentially. But will it correct and revert to the mean? It typically does. So if you're an impatient person, you might think, I must buy a house now. Houses are only going to go up in value. That's what people said in 2006. And it devastated the housing market. So history, history doesn't always mimic, but it rhymes. You've probably heard that before. So especially when it comes to the economy, we have booms and busts, booms and busts. But you need to do your own research. Use your brain, do your own research, and figure out why somebody is telling you something. If somebody is telling you to buy a stock, buy a house, buy a car, or whatever the investment happens to be, everyone has motives, including me, right? Everyone has motives. You need to figure out what those are and make the decision for yourself. Because if you're constantly following the latest trend, you'll be buying Bear Stearns in '08. Right. All right, guys, I'm going to go enjoy the mountains. Thanks for watching. Thanks for listening. If you think this stuff is important, please share with your friends and family. And I'll see you in the next episode. Later.